Real estate companies like Zillow, Opendoor, and Redfin are absolutely crashing right now. We're talking massive declines in their stock price, and I believe that these huge issues that these real estate companies are facing is a sign that the US housing market is in deep, deep trouble and on the precipice of a big crash. What I'm going to do in today's video is explain just how bad the situation is for companies like Zillow, who are experiencing in a single day a 10% decline in stock price, and how that this is not just a Zillow problem. Companies like Opendoor and Redfin are also struggling. If you want to track the housing market and you want to get a sense for how the future of the US housing market is going to go, take a look at what these companies and stocks are doing, because it's going to give you a window into the future. Without further ado, folks, let's get into the data. So the first place we're going to start here is a very simple line graph, and we're comparing two key indicators here. The blue line is Zillow's stock price, while the yellow line is the month-over-month change in home values in America as reported by Zillow. So we're comparing how Zillow's stock price relates to the change in home values in America. And what you can see here, folks, is that there's a very, very, very strong relationship between these two variables. And that makes sense, right, folks? Because Zillow is one of the biggest real estate companies in America, and multiple lines of their business are dependent on an expanding housing market. Their Zillow Offers program, which they've now put on pause, was dependent on continued home price appreciation going forward for it to be successful. Additionally, Zillow's IMT and Premier Agent segment depends on more and more realtors flooding into the housing market and wanting to pay Zillow for marketing and leads. So it would make sense that as the housing market goes, Zillow's stock price goes. But what's extremely interesting, folks, I'm going to bring you back to this graph, is that over the last 18 months, the change in Zillow's stock price seems to be leading the change in home price in America. So just like, take a look at this. Zillow's stock price bottomed out at $36 a share that first month of COVID and the pandemic of March 2020. And then since then, it's just been on a massive upward trajectory through early 2021. You can see that Zillow's stock really bounced before home prices started to bounce by a couple months. And then by February 2021, when Zillow's stock price hit $160 a share, that was about 6 months before we had peak home price growth in America in July. Now, as Zillow's stock price declines over the last 6 or 7 months, we're just starting to see that effect on the deceleration of home value increases. And so what I believe this means is that what's happening to Zillow's stock price today is likely going to happen to the housing market in the next 3, 4, 5 months. Is that the more we see Zillow's stock go down today, the more we're going to see a deceleration in home price growth and eventually a crash in home prices. Now, this is particularly concerning because in recent days, Zillow's stock has gotten absolutely pummeled. We're talking double-digit stock price declines in a single day. So take a look at this, folks. We're looking at the trading of Zillow's stock today through 1:30 p.m. Eastern time, and we can see that, holy smokes, we have a 12% decline in Zillow's stock price in just one day. In just the first 5 hours of trading today on November 2nd, Zillow's stock price has gone down by 12%. The share price has gone from $95 a share all the way down to below $85 a share. And you can see here that Google has it labeled as the top loser, a security with one of the largest percentage declines since its last closing price. Holy smokes, folks, a 12% decline in Zillow's stock price in just one day, and that's actually following a 9% decline, which occurred yesterday. That is terrible performance, and it's likely related to the issues that Zillow is having in its home buying program. If you've been watching my channel over the last couple of weeks, I'm sure you guys know that 2 or 3 weeks ago, Zillow stopped buying homes as part of their Zillow Offers program, their home flipping program. They stopped buying. But then not only that, Zillow is now fire selling all of the homes they already own. There's about 7,000 homes that Zillow currently owns that they're just looking to get rid of. Now, some people are arguing that this is a Zillow-only issue, that Zillow paid too much for these homes and they messed up on the execution, and that them selling and wanting to sell 7,000 homes right now is not a sign that the housing market's in trouble. It's just a sign that Zillow is in trouble. However, folks, we're already starting to see issues now spill over into other real estate tech companies. Take a look at Opendoor's stock today. For those of you that don't know, Opendoor was Zillow's kind of main competitor in the home buying space, and they're actually the biggest iBuyer, the biggest home flipper is Opendoor. Their stock price is down by 14% today. even more than Zillow's. Their stock price has gone from $25 a share all the way down to $21 a share, which again, Google has them labeled as a top loser. A 14% decline in stock price in one day has erased about $1.5 billion in market capitalization from Opendoor in just a mere 5 hours. Clearly, there's a lot of negative sentiment right now around real estate tech companies who basically derive their revenue off the health of the US housing market. And I'm taking this as an indicator, a warning shot that there's more problems ahead in the housing market. Because basically, Zillow and Opendoor, these would be the companies that struggle at the company level, at the stock market level. They would struggle first before we really see the pain hit the US housing market. Something very similar happened back in the mid-2000s when a lot of home builders started to see their stock prices decline around 2005, 2006, right before the bubble burst. I think we're seeing a similar situation here with these real estate tech companies like Zillow and Opendoor. Even Redfin is also struggling today and over the last couple months. And really where my skepticism of the US housing market comes from, and what this all comes down to, is just how high home prices are today relative to the levels of inflation and wages. If you've watched my channel for a long time, you're probably getting almost sick of me talking about this. But what we are seeing right now in the fall of 2021 is that home prices in the US are at a record level compared to both inflation and wages. And this has only happened one time before in US history. And you can see that on this graph where we're tracking inflation-adjusted home prices in America going back to 1953. And we can see that from 1953 all the way through the late 90s, inflation-adjusted home prices did not go up. So just think about that, folks. For 50 years, from 1950 to 2000, we had no increase in home prices above the level of inflation, aka above the costs of other goods and services in the local economy. But then that quickly changed in the early to mid-2000s, where we see home prices just vault up out of control, peaking in mid-2006. Just crazy, crazy growth here, folks. Way above what we've ever seen historically. Of course, home prices then crashed in the worst housing crash the US has ever experienced, so that by 2012, inflation-adjusted home prices were only 9% above where they were in 1950. Since then, the process has started all over again, especially over the last year, and now we are once again at a record level of inflation-adjusted home prices. And so, folks, home prices are going to come down. It's okay. We can acknowledge that. We can admit that. They're going to come down. The US is down 4 million jobs from where they were pre-pandemic. We have all these people quitting their jobs. We have vast majority of renters not able to afford down payment. Prices are going to be coming down, and the crashes that we're seeing in the various real estate tech stocks right now are indicative of that. These are forward-looking indicators of what we're going to see in the housing market over the next 6 months. Of course, folks, this is just my opinion, backed up by what I think is some really solid data. However, I want to hear your opinion. What do you think of the US housing market right now? If you're an owner, a buyer, a renter, or seller, what are you seeing out there? Let me know in the comments section below, and also make sure to hit the like button on this video. When you do that, it gets this content out to more people, which in turn allows me to produce more of these videos going forward. Because of your guys' support and hitting that like button and watching and commenting, I've been able to actually increase my output and post more videos on this channel. So hit that like button, leave a comment below, and also make sure you're a subscriber.